Thank you, Sarah and Carl. Welcome to the Halftime Report. I am Frank Holland in for Scott Wapner. Front and center at this hour is the rally. Is it on solid ground or is it on shaky ground? We're seeing some signs of AI exhaustion and much more under the surface. That weakness dragging down stocks today. The investment committee is standing by to break it all down. Joining me for this hour, we do have Josh Brown, Joe Terranova, and Jim Lebenthal. Before we get this conversation started, let's start with a quick check on the markets. You can see we're in the red across the board. The Dow down more than 100 points. The S&P pulling back about 0.75%. The Nasdaq down over 1%. The Russell down just about 0.75%. And that's where we begin. Jim, you're right here at Post 9 with me. At the open, we saw stocks, they kind of moved up from what the levels that we saw in the pre-market. In your mind, what does that symbolize? The fact that we're looking really weak in the pre-market, then we open up. We're still lower, but not as low as we were.
Yeah, I mean, let me not bury the lead here, Frank. It says to me that any dip, no matter how small and inconsequential, is likely to be bought from here to year end. I don't justify that. I don't attach morality to that. I simply make the observation. Market participants with really a minimal amount of experience would have looked at today's futures action when they woke up and said, oh boy, here we go. You know, buckle your seatbelts, and you know the S&P 500 opens up, goes down about 1%, and then stabilizes where we are here, down about 0.7%. Now, I have no idea, Frank, how it's going to end up. Could have trailed off at the end, sure, probably. But the simple truth is there is a lot of cash on the sidelines, and the history of the past few months has shown that dips like this are an impetus for money to come in, whether that's retail investors seeing the opportunity, YOLOing, whatever you want to call it, or what I think is the more potent force. It's institutional investors, many of whom, 75% of whom, are behind their benchmarks and look at an opportunity like today as a chance to get in and do a Hail Mary pass to catch up. Look, I don't want to throw caution to the wind by making short-term projections, but I do feel we're seeing that dips are going to be bought from here until year end.
All right. Joe Terranova, I want to come over to you. Earlier this morning in Hong Kong, we heard from the CEOs of Morgan Stanley, also the CEO of Goldman Sachs, both of them saying we could be on the way for a market correction. Do you think that's what drove some of the action in the pre-market? Is that what's driving the action right now in the regular session?
Breaking news that we potentially could have a correction after having well over 100 trading days without a 5% sustained correction. I think we've all been talking at length over the last several weeks about the possibility as the calendar turns into 2026, you get elevated volatility and you ultimately get a sustained 5% correction. Pick your reasoning. You could cite valuations. You could cite the possibility that maybe AI spend is getting a little uncomfortable place in terms of leverage, or whatever the reason might be. But it's healthy that you get that correction ultimately. I still think the secular tailwinds that are in place, ranging from global central banks who are cutting rates to economic growth that's going to benefit from some fiscal tailwinds and regulatory relief, inflation coming down. I think all those secular tailwinds are still in place. So really, I think what today is about valuation. And I responded yesterday to you when we were talking about Palantir. And my first words were, valuation is the impediment. And I think today, valuation is in the headlines. It's front and center because of a lot of the commentary that we heard from the CEOs. And I think markets are paying heed to valuation, and they're probably rightful to do so. Today, you're seeing healthcare is rallying. You're seeing cryptos coming off. That all makes sense to me if we're going to say, okay, valuations look a little bit extreme. We need to offer some relief there.
Josh, coming over to you. What do you make of today's action? Does this signify a broader trend or a change in momentum or an inflection point, or is it simply just one day?
No, it's more than one day, but I don't look at this as a bad thing. We're actually undergoing a market-wide correction right now. The reason why people don't know it is because it hasn't hit the Mag 7 names, but that's literally what's taking place. I want you to understand, beneath the surface, 31% of the S&P 500's components are more than 20% below 52-week highs. So this rally is not as broad as it was throughout most of the fall, and that's perfectly fine, quite frankly. 6.5% of constituents of the S&P are at 52-week lows today, right now. That's growing. That was probably 4% 2 weeks ago. Median RSI across the entire S&P, 44. That sound like a bull market to you? Me either. The median percentage below 52-week highs is 15%. So what I'm telling you is that the typical stock, not the average, but the typical stock is already in its own correction. 62% of the S&P 500 are below a 50-day. So we do not have this across-the-board rally that we were enjoying for most of September and October. But I want to point out, this is what you want to happen if you want to stay constructive and you want to set up for a year-end run. You've got to see some of the excess come out of the market, and you've got to see companies get sort of sorted out and repriced after running up into their earnings. And that is literally what's taking place. Can I please have a chart of Oracle? This thing just filled the entire gap. So all that good ideals with Planet Jupiter and Mars and NVIDIA and OpenAI, forget it. Forget it. It's come. I don't know. You guys show me a 5-day chart. I'm trying to show the gap being wiped out. This is what healthy bull markets do. They wick that enthusiasm off the top and reset. And I think it's good. I think this is what you should want if you want to stay constructive here.
Yeah, I mean, I think even to a certain extent, Josh, kind of pointing out your point where you're showing the 1-week chart of Oracle down about 10%. Jimmy, I know you wanted to make one other quick comment, and we're going to move on.
Well, sorry. I mean, I'm an Oracle shareholder, so I'm aware of what Josh is pointing out, and it makes me think that's front of mind for me right now. You know, Oracle is down from 345 after earnings to whatever it is right now. I'm not going to look at the screen, 252, whatever. And whenever you have a downdraft like this, whether it's Oracle, whether it's Meta, there is some reason. I mean, remember NVIDIA going from 160 to 90 in January, and the reason was DeepSeek. But look at where it is now. And my point on this is you have two choices with Oracle. You can either believe OpenAI is going to come through with all of the things that it has announced and promised, or you can believe that it isn't. The answer to that question is not going to be known for probably another 2 years. And in the meantime, what's really weighing on Oracle and on Meta is this debt question of why are they financing things with debt? And I've been saying this for the last week. Frank, you've heard it. I'm going to say it again. The reason they are financing this with debt is because if you're the Ellisons or whomever, and you're in the C-suite and you're looking at this and saying, I've got a 250 stock, or a week ago, a $280 stock, I can finance these data centers by issuing stock that I think a year from now would be 350 and give up a 25% gain, or I can go to the debt markets where they're willing to lend me money at 5 to 6% depending on the maturity. I wonder what I'll do. And the reason they're able to borrow at 5 to 6% maturity is because of the cash flows that they already have. Sure, there's questions about how low or how high those cash flows are on these data centers, but the fact of the matter is they're positive, and that's what's paying off the debt. So really, to me, this is kind of a no-brainer. Again, as I've said many times, corporate finance 101.
All right, we're going to get to the broader AI trade in just a minute, but right now we want to kind of dig into one of the names really leading to the downside today. Of course, that's Palantir. Pulling back despite a strong earnings report and strong forward guidance. Arsima Modi joins us now with much more and also some colorful comments from Alex Karp today right here on CNBC.
That's exactly right, Frank. Palantir really hit the ball out of the park with Q3 earnings. That's the view from a majority of sell-side analysts that cover the stock. The only challenge is how to value Palantir and how much of its growth is already priced into the stock. Jefferies writing that the numbers are great. Valuation is, quote, extreme at 83 times 2026 sales. Cantor Fitzgerald writing that we continue to be impressed by its products, business model, execution. Our neutral ratings only informed by relative valuation, adding that Palantir trades at about 5 times higher versus other names in the infrastructure software sector. CEO Alex Karp joined CNBC. Here's what he had to say about valuation.
They thought Palantir was overvalued at 10. They thought it was overvalued at 20. I'm not even here saying what the valuation is. I'm just saying find a company in the world that has a rule of 114, that has U.S. commercial growing at 121%, that aggregate growth in the U.S. is 77%, that has throwing off free cash flow in a way that's anomalous, and that is fully aligned with our customers.
Karp also blasted Big Short famed investor Michael Burry of Scion, who revealed in a filing last night that he's shorting Palantir and NVIDIA, to which Karp said, quote, the idea that chips and ontology is what you want to short is crazy. Going forward, investors will be watching government revenue growth for Palantir, which did decelerate slightly from 53 to 52% quarter on quarter. Jefferies analysts add that the ongoing government shutdown likely lowers the number of new contracts getting done, Frank.
All right, Arsima Modi with the very latest on Palantir. Those shares, one of the biggest drags on the S&P right now. Joe, I want to come over to you. You're a Palantir shareholder in the Joe T ETF. What do you make of the reaction in the stock after very strong earnings? I do want to point out there was also a warning on a Korean exchange about SK Hynix that seemed to spook the markets in addition to those comments from the Morgan Stanley and Goldman Sachs CEO. But what do you make of this reaction?
Valuation was the impediment. I said it yesterday. 85 times sales, 200 plus times earnings, and apparently this morning the marketplace is paying attention to that. Now, if there's something embedded in the earnings report for you to be particularly troubled by, I mentioned yesterday that I thought the international expansion was very favorable. Well, to hear Alex Karp say that growth is being held down by a stagnant Europe, okay, that's somewhat troubling. But I think overall, you have to look at this from the perspective of how do you think about positioning here? And unfortunately, in fantasy land, it's very easy to say, okay, I'm going to make money being long, or guess what? I'm going to make money being short. I think probably what's in front of you is that both sides are going to be disappointed, both the longs and the shorts. If you have the ability to be really fast in markets and go in there and, take a short position. I think the high yesterday was 207. That's the all-time high. If you think this stock could fall 150, 160, okay, great. Congratulations. You probably should be managing a hedge fund. But that's very difficult to do. If you're thinking about selling short on the premise that this stock is going to go back down to $40 or $30, the fundamentals just aren't there to suggest it. So, look, we entered this stock in January of 24 at $16. Frank, we have an 1,100% gain in it. And the reason that we entered the stock had nothing to do with me being a genius in analyzing the balance sheet and fundamentals. It had to do with momentum. And I'll be very candid about that. And the momentum has remained in place in this stock. And I don't know where we're going to exit. I never anticipated we're going to have an 1,100% gain. I don't know, maybe the gain's going to be hopefully 400% or 500% by the time we're out of the stock. But momentum guided us in and momentum's guided us out. And I'm going to be very clear about that. And I think ultimately, when you're looking at positioning in this stock, you have to understand that this might be entering a period where it's going to disappoint everyone and move in a sideways pattern after these earnings report.
Joe, I want to come over to you. You're saying if you're looking for something to nitpick, it was some of the stagnation in Europe. But if you look at the U.S. commercial business, up 121% year over year, operating margin expanding quite a bit. It was over 50% this quarter, 34% a year ago. Doesn't that really overshadow some stagnation, I guess, over in Europe? I mean, the fact that commercial customers are adopting, and we know that Palantir has been one of the better performers using their boot camps to drive adoption. I actually talked to a number of companies that use their software. They seem to not only understand ontology, but just the use of this software. And a lot of them say it helps you expand margins, which is supposed to be one of the big base cases.
Nobody's denying any of that. There's not one person looking at Palantir saying anything about like the health of the business. Joe is exactly right. The entirety of the debate is how much growth have investors already pulled forward into the valuation that they're currently paying. This company is obviously on fire, and it's actually kind of weird to me how defensive Alex Karp seems to be, because people who are real investors in the AI space lionize him personally and worship this company's execution. Like, I don't know of anyone in the AI world that's like, Palantir, no big deal. People are losing their minds over how well this company's doing. What he's worried about is, I guess, a couple of people come on TV here and there, and they're bearish on Palantir because of the stock price and the valuation. And he seems to be really fixated on that, but it doesn't make sense to me because they're killing it. Frank, all those metrics, and I have 50 more in front of me, no other company, to his point, no other company is executing at the level that they are in this space. And I guess like a more Buffett-esque response would be, we take care of the business, the share price will take care of itself, especially considering he said he has $880 million still on the buyback. Wouldn't you want the stock to come in? Unless you're issuing stock, okay. I don't even understand why you would want a higher and higher and higher valuation You're buying stock back. Let people be bearish. Let people sell it.
One other point, Frank, if I could make one other point.
Yeah, go ahead.
The other thing that I've learned over many decades is when you have an individual equity name like this that becomes a battleground stock, that becomes so prominent in the headlines, it doesn't mean if you don't have a position, you have to engage. You have to take a position. In fact, it means the opposite. It actually is a signal to step away and let the marketplace do what it needs to do. Let the marketplace maybe work off some of the extreme valuation. Let the strong fundamentals, which I agree with that Josh is citing, come into play. But that happens over the course of time. And you don't need to race ahead of time and establish a position just because everyone's talking so much about it. That's detrimental behavior.
Yeah, by the way, while we're talking about positioning, Michael Burry has been on Twitter since some of these earlier reports come out. He seems to be saying he's not shorting the stock. He has puts, almost $1 billion worth of puts. He kind of put out some funny tweets about that. So I think a lot of people have been saying shorting, including Alex Karp, but it's puts about $1 billion. He also seemed to reference the 13Fs perhaps being backwards looking. So, Jim, I want to come over to you with that in mind.
Yeah, I think I felt kind of like Joe and Josh were talking to me as a typical investor who's not in Palantir, and I thank you guys for that insight.
Jim.
No, but Josh, I mean, you know what I'm about to say, right? First off, Mr. Karp and Mr. Burry both have eloquent points, and they both might be right. It's a question of timing. For somebody in my shoes who doesn't own it, the problem is I can't take investors' hard-earned money and put it to work at 200 times earnings on the fear that it goes down to 120 times earnings, and those investors turn to me and say, well, why did you buy it at the price you bought it? And I don't have a good reason other than momentum, which has worked very well for you, Joe, and I compliment you continuously on it. It works for you. It is your style. But I do want to address something. You know, I just said that both Mr. Karp and Mr. Burry can be right. The thing about Mr. Burry that viewers need to understand, he is so well practiced in waiting, far more so than the average viewer and the average short investor is used to. So he's out here saying, yeah, I'm just buying puts. There is a cost to puts. And, you know, those puts expire, and then you have to decide to re-up them. Mr. Burry, as I said, has an exquisite track record, and there's a great movie, The Big Short, in which, you know, this is on display of waiting. The average investor can't wait that long, and that's why shorting, or in this case buying puts, is awfully dangerous for a stock that's growing earnings per share at 50%.
Burry is also very responsible. He tells people, I'm not your financial advisor. Don't follow me into trades. There's a lot of people who get personal satisfaction out of being very publicly right and tweeting out a position and just saying, watch this, and not saying, come do this with me. And I like that Michael Burry comes out and says, guys, this is not a game that you should be playing with me, but I still want to tell you what I'm doing. He also says, he's been wrong like everyone else on earth. And he says, I was wrong. He said, go to cash in the middle of last year, right before like one of the biggest phases of this bull run. I think he had puts on NVIDIA in January that he was talking, like, it doesn't always work out. He's willing to be public with his positions. Maybe it's interesting to some market participants, but if you think he's your financial advisor, dude, you're losing perspective. It's just a guy doing his own trades. Even more for warning people, this is not a game for everybody to be playing.
All right, Josh, since you say you respect Dr. Burry very much, you mentioned his puts on NVIDIA back in January. He actually put some puts on NVIDIA this time around as well, according to 13Fs. Not clear on Twitter if he's trying to dispute whether that's his current position or not. What do you make of that, the idea that he's also basically, it really seems like he's putting puts on the big money makers in the AI economy, both NVIDIA and Palantir?
Dude, correction because the Mag 7s start to come in with all the rest of the market, which I think is sort of what's in progress right now. That position could look incredible, but long-term investors would look at it like, wait, the stock came down 20 points after going up 100 points. Who cares? So there's room for multiple people to be right on different time frames. The other thing to keep in mind with 13Fs, here's how it actually works. The quarter comes to a close, and the filers have up to 45 days to disclose what they did during the course of that quarter. So intra-quarter, people could be in and out of positions and not even have to report them at all. So once again, no one's going to tell you I bought this and here's the exact time I'm selling it. So like it's really, really difficult to try to follow a professional and do exactly what they're doing. And I really don't think most people should even be attempting to do so.
All right. Speaking of right or wrong, Joe, I want to come over to you. Also an NVIDIA shareholder. Broadcom named the new top semis pick at Jefferies. It's actually replacing NVIDIA.
It is, and you have two names that you need to focus on here over the next 30 days. One of it, obviously, being Broadcom. It is captured a significant amount of market share along with NVIDIA. The other name that is of interest is AMD, and AMD is going to be reporting earnings reporting earnings this evening after having a remarkably strong October. The month of October, the stock was up 58%. It hasn't done that in well over 20 years. So if valuation is going to matter once again and again, valuation is not that's not the lens of which I look through markets, but there are others that do that. And there are cycles that we go through in markets where markets prioritize that type of strategy. And I think what Josh said earlier in the show, I think we are at an inflection point where the market is now looking through the lens of, okay, what's your valuation? So you look at AMD and you say to yourself, okay, wait a second. They're really going to have to prove themselves this evening. They're really going to have to show that the business, the revenue is strong with the big four. The big four runs somewhere around mid-teens for their growth, and that obviously being Amazon, Meta, Alphabet, and Microsoft. But the valuation is a little bit high here. If you look at the forward PE, you're talking about getting into the upper 30s for AMD, and you might be a little bit uncomfortable with that relative to where they've been the last several years. So
stock is up 25% in the last month. They'll report earnings. It'll be an amazing quarter. It'll fall 5%, and the websites will write headlines like AMD disappoints investors. Right. It's like it's so moronic. It almost obviates our need to discuss it. Stocks go down on good news sometimes. That's not a signal that something's wrong. You have to have the context of look at this chart. Imagine this thing pulls back after earnings.
We're looking at the chart, Josh, but I know you say stocks go down sometimes.
OpenAI.
Yeah, true. I know you say stocks go down sometimes, but we saw Meta go down quite significantly. Some people think it was that surprise charge. Other people think it's too much spending. Now we're seeing Palantir. If AMD follows this trend, when is it, or is also seeing that same pattern play out, when does that become a trend that is a signal of something?
Okay, so 10,000 years ago, a tidal wave would come up and wash away a village. And the people would say, oh, that's because Poseidon is angry because so-and-so didn't sacrifice a white ram on his birthday. This is what human beings do. We try to ascribe some meaning to some phenomenon that is not obvious. We try to come up with the story for why. Meta has it tripled in the last 18 months? So, like, look, earnings season forces us into this kind of narrative mode because human beings get very uncomfortable when there's no rhyme or reason for things that take place. We don't like randomness, and we look for answers. And I'm part of that. I'm on TV doing this for, I don't know, how long has it been? 15 years? So I get it. I'm not divorced from this, but I'm just telling you, a lot of times there are great expectations built into a stock, like Palantir. The company delivers, and the people who have benefited on the way up, they say to themselves, okay, that was great, but I'm not adding here. I'm taking some profit. It would be a mistake to go a step further and say, Palantir disappointed investors with its guidance. It's just not the case.
Okay.
Sometimes the case, not always.
Okay, fair enough. And welcome back to Halftime. Let's get to some stocks that are on the move. Uber falling despite beating revenue estimates. Josh and Joe, you both own it. Josh, you want to go first on this one?
Yeah, look, this is a company that's reported another incredible quarter. Profitability is growing. They've announced tons of stuff like deals with NVIDIA for autonomous. This will probably be the biggest platform for autonomous rides over the next 2 to 3 years as they roll out all of these various partnerships that they're working on. And I think that they have successfully made the point that the cross-pollination between Eats and rides is what really sets this business apart and what gives them innings and innings and innings left of converting more and more users to Uber One subscribers, or to people who use both platforms. And that's been the story behind the stock. So it's up 60% on the year going into the earnings. Everything we just said in the A block now applies to these names in the B block. They come out, they report a great number. People see some profit taking and they say, Uber must have disappointed. Nobody who's an actual investor here is disappointed. They are literally crushing it.
All right. Josh says it's all about irrationalness. Joe, coming over to you. I am looking at the valuation on Uber, almost 30 times. Is that an issue here?
No, 15 times forward earnings. It's the cheapest. Find me another. How about this? Costco sells for 50 times earnings right now. Find me another $200 billion market cap company growing 20% as far as the eye can see into the future, selling at 15 times forward earnings. Find me one.
You got
You
Josh
can't.
mad.
I can see. Josh, I'm just going by our system. Our system says almost 30. By the way, I didn't know you answered to Joe. I was going over to Joe with this. I know you guys play golf together, but now you guys answer each other's names. Joe, I'm coming over to you on this one. Josh says 15 times. Our system
Not
says
30
just
times. Are you looking at trailing?
forward. I'm looking at forward.
All right.
No.
So let's just go back for 1 second. Costco's getting punished, by the way, on that extreme valuation. Costco's not been trading well. We've been talking about that. You have a legal charge here for Q3 that ate into earnings. I think the street is looking at that, and in an environment today where it's clearly risk off, you have crypto under pressure and all the high beta names, you're going to see that Uber is going to be punished in that regard. I don't think it's being punished significantly. I still think the stock fundamentally is in a great place. The free cash flow expansion, to me, has been the real story over the last several years, and the reason why I personally bought it a long time ago. Gross bookings were strong once again, and gross bookings coming up for Q4 should be strong as well. Q4 is generally their strongest quarter. So I don't see anything to suggest that there's headwinds in the fundamentals other than the state of the market today and being punished for that one-time charge.
All right, Uber shares pulling back more than 6%. Moving on to Vertex, bouncing back from some earlier losses. Jim, you own this one.
Yeah, first the headlines. I mean, it was a beat and raise. I think the reason it was down earlier today was some concerns that they didn't raise enough. I think that's really missing the point. Maybe, if we talk about the stock price over the last year, it's been choppy. It's been choppy, and while it's up on the year to date about 7%, that choppiness has mainly been due to this new pain drug that's come out called Journavax. It's a non-addictive, non-opioid painkiller. It's approved, and there have been puts and takes about what indications it has been approved for and might be approved for, but ultimately, this is where I think the market is getting it wrong. I think there is a much greater runway ahead for how Journavax will be prescribed than what the market is anticipating. And at 21 times forward earnings, I know this is the valuation show today. I do find that is forgiving for a company that not only has Journavax, but has a core franchise in cystic fibrosis, to which there really is no competition, and has on the horizon kidney medications coming up. So I really like this stock.
All right, Vertex shares up just over 0.5%. And we are back on halftime with Josh Brown's best stocks in the market. Josh, what are you focused on today?
So one of the things that I think is relentlessly fascinating about the markets is how easily price can change your mind. And so when we saw gold earlier in October making the gold stocks making all-time highs along with the price of gold, everyone said, all right, this looks overdone, or I missed it, or I'll buy it on the dip. Well, the dip is here. Newmont Mining is now in a 20% drawdown from that high and still in a longer-term uptrend. So for all the people who said, I can't believe I missed it, I'll buy the dip, congratulations, here we are. Who wants it? Not many people. It is now below its 50-day, which is where historically it had found support the entire way up. And so far, this wrestling match looks like the Bears have it. You could say the same thing about Anglo Gold Ashanti, AU, also on the best stocks in the market list. The third, which we talked about, Southern Copper, that pullback actually looks more orderly, and that one's actually holding its rising 50-day as well. So I think I'm just pointing out here, these are strong stocks and big uptrends. Over the short term, they're finally pulling back to more reasonable levels. Some of that froth is coming out of these trades, possibly because they got caught up in a lot of momentum portfolios because of how well they were doing. Now, if you felt like you missed it, now's your opportunity. I'd be taking a look at all three of these right now.
You know, Josh, you point to what could be, I guess, another catalyst for these names longer term, the fact that we have low oil and gas prices, and the fact that we're going to see a slight production increase from OPEC. It seems like it would keep those prices low. Can you kind of explain that thesis really quick?
Yeah, one of the key input costs to operating a gold mine is energy prices, and so long as energy prices remain low, and the price per ton that they can sell of gold, silver, copper remains high or elevated, that bodes well for profit margins next year, which obviously flows down through to earnings per share. So these companies probably are on pace to report some of the most profitable quarters they have ever experienced. That explains why these stocks have done so well this year, because the stock market is already anticipating that. However, that dynamic probably doesn't change very much so long as oil stays low and gold prices remain somewhat elevated. So if you were looking for an opportunity to buy a dip in a bull market, there aren't that many of them in gold over the last year. This is the opportunity.
All right, Joe, you also own Newmont. Your take on just the idea of this company and that trade?
Well, I agree with Josh. If you're looking for the opportunity to get into precious metals, which have had a very strong year, okay, you're in the midst of right now a correction. Just be prepared and understand that that correction can continue. So you might be buying and have to incur a loss on your initial purchase. You're buying for the long term here. For the month of October, and really for the fourth quarter, let me better state, you're seeing that the U.S. dollar is actually rallying. U.S. dollar is up about 2.5%. That's having an effect on commodities. It's having an effect on silver and gold and copper itself. So I think a lot of that is coming into play. I also think there was a degree of exuberance. I sent a report to a good friend of mine, natural gas trader Daniel Fisher, and it was saying in the report that big trading companies, commodity trading companies, were looking to hire gold traders globally around the world. He remarked back, well, maybe that's the sign of the top, and I think Daniel's right on that.
All right, gold pulling back just about 1% right now. All right, and welcome back to Halftime. Joe T is rolling the dice on a casino stock for the very first time. He's adding Las Vegas Sands. Joe, give us the case here. I'm told, at least, you call these dinosaurs in the desert. What made this name attractive now?
Is Jimmy excited? Yeah, I wish I could be with him right now, but how excited is he for this name?
What about Win? All right,
well,
go ahead.
Jimmy, unfortunately, I'm going to disappoint you. As you know, one of the criteria we look at for quality is return on equity. And there's too much of a fluctuation there for Win with having negative return on equity. That doesn't mean they consistently have that return on equity being negative, but the trailing 12 months do score as negative. So the one name that we did enter, very strong momentum, very strong revenue growth, very strong on debt to equity and return to equity, is Las Vegas Sands. And it is the very first time in the 5-year history of this ETF that we have taken a position in a casino stock. Do with that information as you wish. Maybe that means it's a top. I have no idea. But we do own Las Vegas Sands.
All right, Jim's champing at the bit right here.
I think he's going to make money.
Jim, you own Win, obviously, as you kind of alluded to.
Look, I mean, there's first off, Joe, as we said earlier, is a momentum investor. I'm a fundamental-based investor. They are different types of investing. They can both make money. I think, Joe, you're going to make money in Las Vegas Sands. There is a fundamental difference between the two, besides what you're talking about with regards to the numbers on return on equity. And the simple difference is Las Vegas Sands is all Singapore and Macau, and Win has exposure, significant exposure in Las Vegas. I happen to think that the Las Vegas exposure is undervalued right now because there was a summer softness in the Las Vegas market, which is being cured right now. And I also, again, from a fundamental point of view, I like Win for the Al Marjan resort in Dubai, which is going to, in the United Arab Emirates, which is going to open in early 2027. But again, I think both of these stocks are going to make money, and I wish Joe well, always.
Oh, look, taking the high road. Taking the high road there. All right, let's talk about cruise stocks very quickly. Those stocks taking a pretty big hit today on the back of Norwegian's results. The cruise line beat on earnings, but it then missed on revenue. Joe, you own Royal Caribbean.
Yeah, no, and the momentum is broken down here. Look, I think universally, when you look at a lot of the consumer discretionary names, they're challenged right now. Pick the reasoning behind what it is. And it goes back to Josh's comments at the top of the show and what we said yesterday, Frank. I said yesterday, the market that is greeting you in the month of November is much different than the market that was greeting you in the month of October. You don't have that broad set of opportunities you did 30 days ago. Josh said it very well, succinctly stated, we don't have the broadening out, and the consumer element is one of those one of the lost components of the reasoning behind we don't have the broadening out narrative right now in front of us.
All right, looking at Royal Caribbean right now, pulling back more than 6%. All right, welcome back to halftime. Before final trades, we want to hit one more earnings mover. It's Spotify. You can see here, down about 3%. Joe, you own this one in the Joe T.
I do. It's important to talk about this because this is a 2025 VIP name. Many people own this name, very well owned. The response to this report is not good, and Spotify has not been trading well. 6% ad revenue pressure. This stock has now broken its 200-day moving average. First time it's done it since 2023. You have to exert discipline here over the next several days. If it doesn't break back above the 200-day, you have to reduce your positioning.
All right, want to move on to final trades right now. Joe, you might as well kick us off.
Let's add a healthcare name to the conversation. I think healthcare looks pretty good right here. That would be Insulet, PODD.
Josh Brown.
Staying long Uber.
Jim, you got the final word.
Okay, well, I'm thinking about, Joe, you've said a few times about how the financials have been weakening recently, and certainly the alternative managers have led the charge on the downside. But a very good report today from Apollo. That's a recently initiated position by me. One that I think in the years to come is going to come along, and maybe that momentum will come back, and we'll get Joe in this one as well.
I feel the knife in my back.
No, you're mistaking me.
We
I'm
just
with you,
sold it,
brother.
Jimmy.
Leave the conversation there. That does it for halftime. These guys can finish their conversation offline. The exchange starts right now.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It is Tuesday, November 4th, and the market has closed. And so what we're looking at here is it's 5:26 p.m. Okay, Tuesday, November 4th. And here is the market. In this video, by the way, we just saw Josh Brown and a few other guests on today's episode of the Halftime Report. We saw some clips from there. And basically what we're going to do is we're going to analyze a lot of the stocks they talked about. And so we're talking about 14, not all of the stocks, but we're going to look at 14 stocks and ETFs. We'll also take a look at the indices here, the SPY, the Qs, the Dow. You can see they're all negative right there. The VIX spiked a little bit today. We're going to look at some Mag 7 stocks like Apple, Tesla, Meta. And we will also take a look at some of our members' requests, Coin, Home Depot, UNH, plus we're going to get into some sectors. We will do all that very quickly. We won't spend too much time. We're going to be using the Ichimoku indicator here. And so before we get started on that, let's do the following. Let's look at the market. So like I said, the Dow was down 0.53%. You can see here, price gap down in the morning, okay, to this level, came up and then dropped. And then towards the end of the day, just basically stabilized at down 0.53. NASDAQ actually down the most today, 2.04%. Gap down, moved up slightly, and around 11 a.m. continued its move down. S&P 500 was down 1.17%, same situation there. And the Russell 2000 was down 1.73, okay? Let's take a look at the heat map so we can see what individual stocks, how they perform today. You can see all the semiconductor stocks were in the red, the majority of them here in the S&P 500. So we've got the S&P 500 heat map here. Microsoft was down, Oracle, Palantir, you can see all the stocks right there. But Berkshire was up, Visa was up, MasterCard. Some of the healthcare stocks did pretty well actually today. Utilities actually moved up a little bit. So did the consumer defensives like Walmart and Costco, Coca-Cola, Philip Morris, Home Depot, McDonald's, Lowe's, right? Let's take a look at the sectors. So let me zoom in for a second so we can see that clearer. You can see consumer defensives were the leader today, up 0.47%, followed by financials, healthcare, and real estate. Technology down the most, 2.56%, followed by basic materials and consumer cyclicals. All right, so we're going to start off with the S&P 500 ETF, the SPY, basically, and down 1.19%. We're using the Ichimoku indicator. And if you're unfamiliar with this indicator, there will be a tutorial at the end of this video. All right, there'll be like a 5-minute tutorial, so you can check that out so you can get a little bit more acclimated with this indicator. It's very useful and helping you determine whether or not you should be entering positions, closing positions. It just sort of gives you more insight on the direction of a specific stock or ETF visually, so you can make a better judgment call. Okay. Now the S&P 500, as you can see, it's been struggling now for multiple days, right? So we had that doji candle, and that actually materialized back on Tuesday last week, on October 28th. The very following day, we had another reversal candle. We've look at all these negative candles. What they represent essentially is the opening price there, and that's the closing price. So if you see a red candle, okay, you can see that it opened at that price and then dropped down and then finally closed at 4 p.m. At this level. And so here, for example, it gapped up, but then the sellers took control. Same thing happened here, gapped up, sellers took control, and then it finally dropped under the 9 period, the Tenkinson is what that's called. So it's the midpoint of the last 9 periods. Now, what's going on with it? Well, the good news is with the S&P 500, the SPY here, it did stall at that 673.95 level. So that's based on these prior highs right here. And so the question is, will tomorrow be a different type of day? Because this is what they call a gravestone doji type candlestick, okay? And so this is a reversal pattern. If it happens after a pullback, like you're seeing here, there's a higher probability that it could bounce here. But again, the SPY was down 1.19%, and I'm seeing some other evidence that's kind of a little bit concerning, like the directional movement index here has turned negative, with the negative DI is crossed above the positive DI. Now, it hasn't gotten out of control yet. Like I said, we've found some support at the 673.95 level. So, but I'll be watching this closer tomorrow to see what happens. And of course, I'll be filling you guys in. Here's the QQQ ETF. Here's another one where we do, in fact, see a negative crossover of the directional movement index. It's when the negative DI9 crosses above the positive DI9. And price did, in fact, close under the 9 period. So you can see here, for example, how, yeah, price was moving up slightly, right, those 3 days, but it was all negative candles. And then, boom, it dropped. So we do have to be a little bit more cautious right now. Here's the Dow. This one pulled back. And so what I do like about this particular chart is the fact that it actually stalled, okay, at this trend line, the 470.38. That, okay, is derived by taking the high here from that candle, going all the way back to October 3rd. So you can see here I drew that trend line. Now, once we broke through it, okay, came up, now it's come down. And remember, once you break a level of resistance, because that was a level of resistance, you can see it found resistance there and pulled back, but then finally broke through here. Once you get that breakout, which we did get right there, now, once price is above it, if it comes back to that level, it's now a level of support. And in fact, that's exactly what happened. It actually developed what's called a spinning top or doji type candle, and it's bullish. So there's a higher probability tomorrow that we might see a bounce, but no guarantees with candlesticks. It just gives us a little bit more insight, a higher probability trade. But right now, you got to wait and see. It's a wait and see approach. If it continues to break down further below the Kijun-sen, which is the 26 period here, takes the midpoint to the last 26 periods. If price gets under that level, expect it to go to the next level of support, and maybe we'll have a more, a deeper decline from that high down to the cloud. Overall, what do I think about these indices? I think we're still in very bullish territory. And I'll say that because we're still on the weekly chart. If you look at the weekly, let's look at the weekly on the SPY, for example. We are still holding up above the 9 period on the weekly chart. We're holding above it on the Qs. That's the green line right there. Although it is forming a bearish engulfing pattern. The Dow Jones is also holding up above the moving averages in the Ichimoku cloud. Russell 2000, no. Okay, so the Russell 2000 is the one weak link here. It's the smaller and mid-sized companies. And as you can see, it's pulled back now. We won't know if this candle is actually going to close under Tenkinson until Friday, because we are looking at a weekly chart right here. So you have to wait another 3 days, and we'll know for sure around 3:30 p.m. to 4 p.m. We'll have an idea of where we're at. And so we got to pay attention. Now on the daily chart, you'll notice it's also pulled back there's a good chance that we might find a little bit of support at the cloud, and it could potentially bounce. But it does look weaker. It looks the weakest out of all the indices. The Russell does not look good. And if you notice here, the ADX is moving up, the negative DI is moving up, the positive DI is moving down. This is all very bearish. Now, the last time that we had something like that happen, you can see right here, back here, it happened. The ADX started to creep up. Negative DI was above the positive DI. It happened on higher volume. And if you look what happened, right? Let's go in time, back in time. It dropped, price dropped. We can look for another instance. All I got to do is just go back in time. We can find another instance of that exact situation happening. Let's take a look in the past. Okay. I mean, this has been a pretty bullish market overall, you know. But if we go back to, say, over here, this, of course, is back in right around this area here. Do you see, like, well, of course, we were also under the cloud, which made it even more bearish. But if you take a look with this indicator, the white line was moving down, okay? Once it started moving up, and the negative DI was moving up, and the positive DI was moving down, as you see right there. If you go straight up, happened on that candle right there. What did that lead to? Big drop in the Russell. How big of a drop was that? If we measure it from this level right here down to that low, it was about a almost a 9% drop or so, somewhere around that 9.3% drop. So, and then of course it continued to, then it stalled for a little bit, right? ADX started moving up slightly. How do you know that the momentum is starting to come out? Is when the ADX itself starts to slow down, like you see right there, right? See how it kind of started to decline, and if you go straight up, you'll notice that the price started moving up briefly. But because we were under the cloud and under the moving averages here, the Kijinsen, it still started to decline. And you can see that right here. Again, with the ADX started moving up on that candle, right? Boom, another drop. So hard to predict if this thing is going to, right now we're in bullish territory because we're still technically above the cloud. So that's the only positive thing. And one other thing also to keep in mind is that we are also holding up above some support levels. You can see how price found support here, right? So we're still above that 237. Let me see, what's that exact dollar amount? It's 237.56. All right, so that's what I'd be watching also as another level of support if price comes into the cloud. What happened to the VIX today? Well, the VIX on the daily chart here, it moved up. It was up 10.66%, but towards the end of the day, we had a reversal candle and price closed back under the 200-day moving average, that dotted yellow line. So, but overall, this is not good. The VIX is starting to spike up a little bit. Notice the momentum is increasing, right? See, the ADX is starting to move up. The positive DI is moving up and the negative DI is moving down. Now, we do not want volatility to increase, because when that does happen, and that represents fear in the markets, price in the S&P 500, the Qs and the Dow usually goes down. As you can see, we have the inverse reaction when the VIX is moving up. One other ETF we can look at is FEZ. This is the Euro Stocks ETF. And here's another one that's also showing signs of weakness recently. We basically created a double top. There's the prior top. There's the second top, right? So double top pattern. But we are finding support at 61.50. So we will now that's based on that. That's an old trend line going all the way back to this level here from August 22nd. So you can see once we broke over here above that level and closed above it, price moved up, came down. We did actually break it briefly before reinstituting it. So we may want to also throw one more trend line right there, 61.07. That's another level of support that we should find if the Euro stocks continue to drop. All right, let's go to the stocks now. We're going to look at the stocks talked about in the show. I've already reviewed all these guys. I've reviewed all of the stocks. And guess what? Out of 14 that I'm going to review here, just one of them actually passed the test with a blue flag, which means that it passes technically on both the weekly chart, which is, so this is the Las Vegas Sands. This was Joe Terranova's, I think, one of the stocks that he talked about that he recently purchased. He's a momentum trader, and yeah, price has moved up. The ADX is moving slightly up. Positive DI is moving up. Negative DI is moving down. Price has been moving up now recently. The only concern I have is that, it's basically coming right back to these prior highs right there. See that high? That goes all the way back to 2023, believe it or not. 2023, a couple of years ago. And then we'll have more resistance up there around 65 or so. But it has broken above this level. This happened last week on Friday. This is a weekly chart you're looking at. Here we are continuing. Here's the daily chart. All right, so it's showing some strength. It broke through this little consolidation area right here, right, and has continued to move up. Now, it seems to be stalling around that 61.25. You can see that doji type candle. I don't know what's going to happen here. Anyway, so that's the, believe it or not, that's the only one that has, like both a strong chart on the daily, because we do have a future bullish cloud here. Remember the Senkou span A, which is the light colored blue line, always needs to be above the Senkou span B. We need the green line to be above the red line. We need the Chikou span, the white line there, the closing price projected 26 periods ago to be above the candle 26 periods ago. When we have that on both the daily chart and on the weekly chart, we are in a good place. Okay, we're basically, we've got confluence, and that this is a strong market, and that we should expect it to continue to move up, or stock in this case, right? All right, but the rest of these guys, I mean, there was a red day. You can see the majority of the stocks were down. Now, APO was up 5.29%. Okay, but, when in the context of what you're seeing here, this is not a strong uptrend that we're in. We're obviously in the downtrend. Okay, you can see the lower high right here, another lower high right there, and we're right at a level of resistance. So yeah, we've had a small, short little move up right here, but I think there's a higher probability that we're going to see a continuation to the downside. That's a weekly chart. Here's a daily chart. Okay, yes, it's showing a little bit of strength here. Actually, what looks good on the daily is the fact that it broke through this high right here, this prior high. Okay, got above that level, and yes, we did develop a higher low right there, but we're still under the cloud. And see that dotted yellow line there? That's the 200-day moving average, just waiting right there for this candle to get close, and then it will probably push it down like it did right there. See that shooting star candle? That's a reversal candle. It led to that big drop. So this is not a stock I'd be considering. We talked about Anglo Gold, Ashanti Limited. Now this one's also pulled back a little bit. Gold hasn't been doing particularly well recently. But the good news is it does seem to be finding some support around the low there, the prior low. And, it's not like it's breaking down like crazy here yet, but it could. We did, in fact, have a negative crossover right there. Okay, the faster moving average, the green line, the 9-period crossed into the 26. The Chikou span got underpriced. So there's a lot of things that are happening here that don't look particularly great. The ADX is moving up. The negative DI is moving up. Not good. Positive DI is moving down. And there's more volume today than there was yesterday. There's a little bit more pressure. But notice how price stalled at around that level there. So again, we need some more evidence here. Overall, the trend on the daily is still intact as far as the cloud itself is still bullish in the weekly chart. We've had 2 weeks now where we're under the 9-period, but you can sometimes have something like this, a very short pullback, like you see right here, and price even closed under the Tenkan right there, and it continued to move up. So that's what I'm saying. We have to pay attention and see what happens. I mean, looking at the weekly chart, something positive I'm noticing right here, right now, is the fact that the volume is declining. What that means is as price is dropping, okay, there's not as much participation here. I think that once we reach a certain level, we might, and this was a reversal candle. Notice how we didn't close under that yet, right? This is a weekly reversal candle that happened last week, a spinning top. So let's pay attention and see what happens tomorrow. Broadcom, this is also on a weekly chart, relatively strong. As you can see here, it's above the moving averages. It just dropped under the Tenkan here, but again, this is a weekly chart, so we have to wait until Friday for conclusive evidence on this one. On the daily chart, we got under the Tenkan Kijinsen, down 2.93%. So I'd hold off on obviously adding any new positions at this point, right? This is a time that you want to be cautious. NCLH, Norwegian Cruise Lines, is another example of what can happen if you are adding positions when price is inside the cloud, okay, or under it. Okay, see how it dropped. And so the ADX is moving up, high volume. Hard to tell if this thing, where this thing is going to drop, right? Where it's going to end. But price has gotten cheaper. I mean, the stock has gotten cheaper. At some point, it will find some support, possibly. Let me look here. A prior low around the 1747 level, another 12% potentially to reach that level. It's quite a bit. NEM, Newmont Corporation, another gold stock, has basically, so what's interesting here is it dropped, found some support at the cloud, resistance now at the Tengen-sen, and dropped into the cloud. It's inside now. It closed inside for the first time. So that's a little concerning. Has it taken out this low? It has not. So I'm still relatively, I think it has some potential to recover, but it's not a time to be adding new positions. So that's the idea, is to hold off on that. Palantir also dropped 7.94%, big drop, a gap down. So, after hours. And so after the market closed yesterday. So that you can see here, down 7.94%, and but found some support at the Kijun-sen. There's a daily chart. Here's a weekly chart. PODD is Insulate Corporation. They talked about that. That's inside the cloud. I'd hold off on that one too. RCL, Royal Caribbean, you can see it dropped as well. So it wasn't just NCLH, but also Royal Caribbean that dropped. Where might this stock find some support? Probably around the 255. It did find it right there, didn't it? See that low right there? So that's 255.60. It literally kind of stalled right at that level. So we might see a bounce tomorrow, but would I be buying it here? No. Okay, it's under the cloud. SCCO. The idea here is to only go long in positions when price is showing strength, not weakness, folks, because the weakness can last quite a while. And our economic situation right now is not particularly great. We've got the government shutdown that's still in effect, right? So until that's resolved, I think we have to be even more cautious. You got copper, SCCO, also dropping after that shooting star candle. We can see the multiple days of decline, down 5.42%, closing under the 26 period. That's pretty bearish to me. Higher volume, a negative crossover right there. Okay, so that's also concerning. What else? SPOT, Spotify. That one, we got ourselves a nice little bullish. We got ourselves a bullish spinning top, but it's under the cloud. No on that. Uber, it dropped under the cloud, but then closed right back in. So that's showing some strength right there, actually, even though it was down 5.06%. But notice where it stalled? Right at the moving averages right there. Okay. Let's take a look at Vertex. So that's also currently, we got a spinning top. We're under the 200. I mean, it doesn't look terrible right there. Looks like it barely closed above the cloud right there, but it's a reversal candle, so I would not be adding. You can see the negative bar here in volume, as well as the negative crossover. We got Wynn Resorts. That's inside the cloud. All right. That was Farmer Jim's. He liked this. He likes this stock. And if you look at the weekly chart on that one, it doesn't look terrible, but it's currently under the Tengen-sen. All right. And then let's keep going here. All right, that's it. That's all the stocks there. Let's take a look at some of the Mag 7s, like Apple, finding support at the Tengen-sen on the daily chart, up 0.37%. So Apple, like I said, I'd flagged that last week. I said that it was starting to show some strength. There's the daily and there's the weekly. Doesn't look bad here. Tesla. I did not give it a flag because, remember I talked about that yellow trend line? All right, that goes back to this date here, 2024. Then again, hit that level in October, and then stalled right there. That happened yesterday on Monday, and then it pulled back. So not surprised by that. That's the daily chart and the weekly chart right there too. You can see it even more clear. What about Meta? Here it is in the weekly chart, still dropping, down 1.63% today. Here's the daily chart. It looks like some of the volume is starting to drop at least, so we might see the stop the stock stop soon, and we might see a reversal based on what I'm seeing here. Let's take a look at the next level of support. Yeah, isn't that funny? So, I mean, I just threw the trend line based on that low right there. See that little tiny candle? And it looks like it's stalled right there, and it actually created a gravestone doji. We might see a bounce tomorrow. Would I be buying it here? No. It's still in a decline. It's accelerated decline, in fact, because it started with this slow decline right here, and then it notice that high and that high material. It actually increased and accelerated to the downside, and then boom, just dropped like a rock. Okay, let's keep going. The sectors, guys, I've reviewed all the sectors. There's just one sector that looks okay out of 20 sectors and ETFs that you see right here. XLV, healthcare, yeah, which is a defensive place to be. Weekly chart, okay. This week it got above the cloud. Now the only thing that's missing here is the Senko Span A. Senko Span A is not quite above the Senko Span B, but overall, I like this one. Here's a daily chart. Looks pretty good too. Today it actually popped above the Tenkan-sen, up 0.45% on higher volume. So, and the positive DI was moving up. So it looks like it's going to have a positive crossover tomorrow, potentially. So I like healthcare. The rest of these, I just skim right through them. Copper, no, under the moving averages and dropping, under that low right there too. GDXJ, which is the gold miners ETF, entered the cloud. This one looks a little bit more bearish because if you notice, it also closed under this low, guys. But it didn't take out this low. So that's interesting right there. See that low right there, pull back to that level, which is 85.60. That might be your last, you've got that level, plus you also have the bottom of the cloud on the daily chart, which is around the 82 level, but it's dropping. GLD stalling at the 360.12 level, this prior low. So this is a level that I'm watching very closely right now because it has some potential to recover, but if things start to drop, just because the market's dropping, it doesn't mean that gold is going to go up. It could potentially, there's no confluence between or synergy there between gold and the markets. There's no nothing that ties the two, right? The two separate instruments to invest in, and gold has been declining along with the SPY. IBIT Bitcoin is also dropping, down 5.53 under the 200-day moving average today on high volume. That's not good. Dropping through these levels. Oh, this is the next level right here. See that low right there? Looks like it's stalled right around that level. So if it drops further tomorrow, that could be an issue. Oil K, the K1 free crude oil strategy, down 0.84%. No on that. Silver declining, but still holding up above this low. SMH also dropped 3.64, but holding above Kijun-sen and above the 350.05, that prior high. So that's good. XBI is pulled back a little bit, holding up above these lows here, down 1.66%. XHB is pulled back a little bit further, but came under the 200 and then got right back above it. I don't know. It doesn't look good. Home builders. Materials, we got a positive spinning top, but I would stay out of this one. I wouldn't be shorting, that's for sure, because when you see a bullish spinning top like that, that could, you could see a short-term move up at this point. If you're shorting this, you might want to take your profits. XLC finding support at the cloud. That's communication services. No on that one too. Look at this negativity here. Energy also looking negative, but we do have a positive candle, the hammer, above the 200, but I'd stay out of that. Financials I'd stay out of as well, under the cloud. Industrials finding support at the cloud, but under the moving averages. XLK is under the 9 period. Technology, you see that negative crossover. I think it might bounce here tomorrow. We'll see. XLP up 0.41%. This one showing a little strength today, but I'd stay out of that one too. It's consumer staples. Real estate is also showing a little bit of a move up, 0.27%, nothing major. Still under the cloud. I'd stay out of that. It's inside this big box here. Utilities still pulling back, down 0.36. XLU. XLY also stalling. It's right under the Tenkan-sen on the green line there. You can see it closed right under there. So consumer discretionary I would not be investing in this right now. You can see it's finding some resistance at that prior high of 243.60. Needs to break above that level, in my opinion. All right, so that does it for that. Let's take a look at some of our members' requests. Coinbase. This one also pulled back under the cloud. We also have a lower high here from the prior high. That's a little bit concerning. And if you look real close here, you can see that we did close about under that low. We haven't taken out these lows here. So you still have some support at 291.46, but expect it to drop a little bit more. All right. And here's the weekly chart for you under the Kijinsen. Home Depot popped above the cloud today, right? So Home Depot, but it's under the moving averages on the weekly, and on the daily chart, it's under the cloud. So I'd hold off on that too. Looks like we might be building a little bit of a double bottom right there. You can see that. So we might see it expand up. Would I be buying it here? No. I think it's still in a weakened state. UNH inside the cloud, under the 200-day declining moving average. Not the time to be getting into this one. Here's the weekly chart, still under the cloud, right? Yes, we had a positive crossover, but now price is getting back under the Tengen-sen. Not looking particularly strong. And that is going to do it for this video. Guys, if you like what I just shared with you and you want to become a member so that you can access the members only video that I posted this weekend, where I shared my entire portfolio and why I'm adding, why I'm closing positions, consider becoming a member. To do that, right next to the subscribe button. And by the way, we're almost at 25,000 subscribers. Please subscribe. It takes 5 seconds. Hit the notification bell so you know when a new video is popping up. And then maybe share this video also with someone that you think might be interested in it. And then if you want to go one step further and really support the channel even further, hit the join button right there next to it. This is one way you can become a paid member here under these 3 different level memberships. Blue Cloud Supporter, you can request a stock to be analyzed or ETFs to be analyzed on the show. Blue Cloud Trader, you get access to those exclusive member only videos, and you can request up to 2 stocks or ETFs per month. Blue Cloud Legend, under this one here, you also can request up to 3 stocks, get access to those member only videos, access some day trading videos, and daily trade updates of my trades, which I post right next to the post section here. You'll see a new tab pop up. It will look like this. It will say membership once you've become a member, and you'll be able to access that. And this is what the videos look like right here. And you can access all the old ones too. So you can see how I've been performing. I mean, it's been a good year. 2025 has been great. 2024 was great. Check out my videos and get a more proper, understanding of Ichimoku, which is, of course, what we're teaching here. All right. Have a great rest of the evening. I will catch you all in the next video. If you look at the weekly chart for the SPY, I mean, we are obviously in a very strong uptrend here. Just really quickly, let me show you what we're looking at here. This is the Ichimoku indicator. It's a Japanese indicator that was basically incepted in the 1930s, late 1930s, folks. It was published in the late 1960s and then came here to the United States sometime in the 80s, I think, is when they started adopting it. And with software, imagine trying to plot this on a piece of paper. It's based on mathematical models, but imagine trying to do that before computers. So let me just briefly tell you what these lines mean. The green line is the midpoint of the last 9 periods. It's plotted right there. Not the closing price, but the midpoint. So think of each of these candles. It takes the highs and lows of the candle and then divides it by 2, finding the midpoint of each candle. So it's giving us an average, really. And the 9 is the green line is a 9 period. So it's looking at the last 9 periods. This one looks at the last 26 periods, the midpoint, and projects it right under the candle. Okay. The white line that you see right over here on the left, that's the closing price today. All right, so that's today's closing price projected 26 periods ago in a line form. Okay, there's different ways to plot price. So in this case, what we're looking for is for the white line to be above the candle 26 periods ago. And we're looking at a weekly chart, so that's 26 weeks ago. All right, there's the candle 26 weeks ago right there on May 2nd. And so when the white line is above it, it's bullish. If the white line is under, bearish. Here's some instances, for example, where the white line was under for an extended period of time, when it probably didn't make sense to be adding positions at that time, okay, in the markets. I'm sure you guys remember 2022, right? It all started right there around 2022, and then it continued through, and then things started to emerge around mid 2023, and then the market started moving up. So what else is this indicator comprised of? It's the cloud itself, right? The Ichimoku cloud. And so that's comprised by taking the Senko span A is the upper line, and that takes the midpoint of these two moving averages. And what it does is it projects the midpoint 26 periods into the future. Very unique concept. And then the purple line is called the Senko span B. That takes the midpoint of the last 52 periods, these candles here. Instead of projecting it under the candle like it did in this case, it projects it 26 periods into the future. Cool, right? So we've got things that are plotting in the future. We've got things plotting in the past, all based on price. All right. And it helps to guide us, really. Think of it like that. It's a map, right? It's gonna give us some insights about what's transpiring at this particular moment on different time frames. We can look at this on a weekly chart. We can look at it on a daily chart. There's the daily chart right there. That's also bullish. What we want is price to be above the Tenkan-sen, the Kijun-sen, and the cloud. Okay. And if you're wondering what Ichimoku stands for, Ichimoku stands for at a glance. So the idea is to see quickly, visually, where are we, okay, on this chart. Very briefly, you know, if all these elements are in play, that we have a very strong uptrend. When things start falling apart and price gets under any of the moving averages or inside the cloud, then there's weakness, and we can identify how strong, you know, the weekend trend is. Thank you for watching. Appreciate all of you guys. Don't forget to hit the like, subscribe button, and click the join button, and maybe consider sharing this video with someone. And I'll catch you all in the next video.